Hi, and welcome to today's event where we have the pleasure to present Penneo. To help me through today, I have co-founder and still CEO Nikolaj Højer and CFO Kasper with me today to help me through the presentation. Today's presentation will focus on today's announcement, the full year end report, and of course looking a little bit into 21 and the guidance there, but we'll also give a little brief on what has happened during 21. But we will primarily look into the future and see what the past is showing us of the coming years. As always, you can type your questions down in the corner to your right side below, and I will try and fit it in if it fits to the presentation at that point of time. But no worry, if we don't catch you, we will take all the questions in the end, and your questions will not be not answered. But I think, Nikolaj, I will leave it up to you to take it from here.
Thanks a lot, Michael. My name is Nikolaj. I'm one of the co-founders of Penneo. I'm the interim CEO still. Not for so long time, but we'll come back to that. I have with me Kasper. We've divided up, so I'll basically take the first approximately 5 minutes, talk a little bit about the strategic things that have happened during the year, and Kasper will take the remaining approximately 5 minutes talking about, the financial results of the past year. Just for those of you who don't know us that well, we are a software as a service company. Headquartered here in Copenhagen, where we have the amazing rooftop office at the Vega building, which unfortunately is quite empty these days. We got listed at Nasdaq First North last year, and our main business is the documentation regarding workflow software for business to businesses. We have approximately 2,000 customers in Denmark, Sweden, Norway, Finland, and Belgium. And a key customer segment is the accounting and auditing business, where for those of you who have your own company, a holding company, you most likely know Penneo because you signed your annual report with that. But don't worry, we do much more than that. I'll not go through the value proposition of what we do, but again, you most likely see us from the user perspective, meaning that you sign an annual report from us. But our main, claim to fame is that we deliver an end-to-end software for specific industries, as I just told, primarily the accounting and auditing industry, but also industries who really are regulated in many ways, like for GDPR or for AML or Know Your Customer software. And that's basically what we do. I'll not go through that in detail. You can read much more about our value proposition at our website. So what happened the last year? I think I've taken up a few of what I believe are the key achievements. The first one is that we successfully did an IPO at the Nasdaq First North in June last year. And, so when you can see we're coming out with a deficit, Kasper will talk more about that later. We'll basically say that is as planned. That's the reason why we got listed, because we want to invest in the future and we're going to invest in growth. And again, Kasper will tell much more about that. We also entered 2 new markets. We got our first audit customers in both Finland and Belgium. And that's basically part of our strategy. Key strategy is the internationalization of our software. So now we have breached out of the Nordics with Belgium as the first, country in Central Europe. And what we also did in 2020 was that we did our first acquisition of some Know Your Customer and AML software from the company called CLA Reply. We're in the process of integrating that into our software, meaning that we have a more thorough value proposition. As I said, the goal is basically to do the end-to-end solution for these customers that we serve. What happened just after the end of the year here in 2021 is also quite significant, and that's what I want to briefly mention that. That is that we had 2 really, really nice signings for our board of directors. First of all, already elected into the board is Rikke Stampe-Skov. Rikke is both bringing the industry know-how because she's a former partner in the audit industry, but she's also bringing a lot of experience regarding internationalization of SaaS because she is the CEO of a tax compliance software called Penneo, which is actually also going on First North in the coming month. So she brings again both internationalization know-how and the industry know-how, which is very important for us. Secondly, I think we're quite proud to announce that we're proposing Christian Sagil for the board with the intention to bring him in as a chairman. That will happen hopefully at the upcoming annual general assembly here in April. You know, Christian is sort of a low-key figure, which you don't know from the media, but when you look into his resume, you should really be impressed. You know, he's a long-term, very successful CEO of insurance company Top Denmark, and he's a very experienced board member of large listed companies like Ambu, Royal Unibrew, and Danske Bank. So we make fun of saying that he basically did Danske Bank to join Penneo's board. So we really look forward to have him on board. And again, we're strengthening basically our board with two very experienced independent board members. And finally, I look forward to getting fired, right? Because I'm interim CEO. And that's why I'm so happy that we announced just 1 week ago that we have appointed Christian Stennevad as new CEO. Christian comes from another software as a service company called Omada, which again, it's B2B. Many of us consumers will not know that, but there's so many similarities in the journey that Omada has been on the last many years and the journey that we have ahead of us, where Christian has basically co-leading the internationalization of that and basically brought Omada into a position where they are one of the global leaders within their niche. So again, many of the same things that we're looking into. We don't know precise when he's going to start. It will be no later than October 1st, I can say. So with these words, where we basically say that we have ended 2020 with a lot of very interesting strategic initiatives and started 2021 to bring in some cool people on board, I will give the word to Kasper, who will dig a little bit more into the financials.
Thank you, Nikolai. I think I'll start out recap what Nikolai just mentioned, that the 2nd of June, we became listed on NASDAQ, meaning that we raised 50 million. When we did that, we announced that we want to use the use of proceeds for 3 purposes. One of them is develop our marketing, develop our product team, and develop our sales team. So when I go to next slide, I think that one of the main thing here is that we have started out to see in the fourth quarter an outcome of some of the investment that we did in the third quarter. So, but starting on top of this slide, we succeed to grow by 48% AR. In my opinion, it's a very very high number of growth. I'm satisfied here as a CFO. And most of all, we succeed, even if it's a higher number measured in crowns, we succeed to raise the growth rate here. And I think that's the main achievement here, that we not only grow 40%, but succeed to grow that growth rate. Sorry for the language here. But when you see on the chart here, you have the left part. This is churn and uplift. This is our current base, subscription base. It's divided to 2 parts. That's how we think in Penneo. How many AR crowns, meaning customers, are leaving us? You can see it's still a very low number, 4%. I think it's a good number for a SaaS company on our age. And also the second one is that we succeed uplift our current base by 25%. So net negative churn is 21%. So if we hadn't taken any new customers in this year, we would have grown from 25% to 30% million. So on top of this, we put new clients to our portfolio, and we actually managed to put 27% on top of the existing ones. I think the main thing to understand about Penneo is that we are not only bringing new customers in, but also growing the old ones. So that's the reason why when you are looking at our P&L later, and we'll have a quick view of that later on, it's the main point here is to understand that it actually makes sense to invest into new clients. So it's okay for us to use more cash than we actually are generating from the current portfolio. So if we just can go to a quick look on our expectation for 21. we expect to achieve approximately the same level as this year. Hopefully we can increase it, but what we have guided is between 52 and 57 million, meaning a growth rate between 40 and, Nikolai, what is it?
56%.
56%.
And maybe here it's a good to ask. We have a question in the audience saying uplift. What is that? What are you uplifting the current customers with? What is driving that? And I have also a new question. A question besides that. The new customers, 67% in ARR growth. Are you getting in bigger customers, or are you selling more of the whole process? What is driving that? Maybe we can take those two questions, Kasper, here.
First of all, what we see is that we're getting bigger customers in. Yeah, that's correct. So when we acquire, sorry for the language, calling acquire customers, but when we achieve to have a new customers, we can see that in 2020 we succeed increasing the average deal size of new customers. On the other hand, by uplift we mean when we engage more with our customers, and we have different verticals and price model for different verticals. So if you're an auditor, you'll mainly be invoiced according to how many clients you have onboarded on our system, and you have a subscription running for a year. So what we typically see is that when we're onboarding, for instance, an auditor customers, they start using us in a small department in the big company. And after some years, 4 or 5 years, we are up and running to see that's what we normally see for a client like an auditor.
And in the 67, is it too early to see that you bought a company, so you really have a much bigger part of the whole customer flow through, or the value chain? Or are you starting to see that you are actually also a little bit of the higher ARR new customers is coming from that strategic decision?
Maybe I can add that. I think it's too early to say, right? We basically acquired the company in September, October. We're in the process of integrating that into the entire organization, both product and sales. So I think it's too early to say. I would basically say that this figure is not driven by that acquisition. Of course, we hope going forward that we can increase the revenue per account by that, simply because we can offer as much more value for the customer. But it's too early to say. That's not what's driving the.
That's not what is driving. Perfect.
To answer directly, corresponding to the numbers here, CLA is not a part of this. It's too early to see it in the numbers. But of course, we expect to, combine a great product with a huge distribution channel as our current customer. So of course, this will also be a part of the uplift situation going forward. So I think we should jump to the next slide if it's okay.
Perfect.
This slide is cohort analysis, meaning that every year we have a new cohort. So customer coming in 24 is the lowest dark blue colored part of the column here. So this is a way of when we're getting new customers in, this bundle of customers, meaning a cohort of customers, is this growing year after year, or is it decreasing because of churn? Because we have churn, but in Penneo we succeed every year to uplift more than we see churn. And one of the reasons is that the customer we see leaving us is very small customers and not what we have built a tool for. So this mismatch between the customers and Penneo, meaning that yeah, they're leaving us, but they're also very small customers. So I think the main part here is to see that every cohort is growing year after year. So even if you become a customer in 16, 17, 18, 19, you can see here that you are a part of the growing ARR year. And that's explained why it's okay for us to have negative EBITDA, since we invest into the future, invest to more customers so we can grow.
And you're starting to get, I guess, a pretty long history on the churn. So you are getting more and more comfortable, I guess, with the level. I don't know but this rather low level for a software as a service company. Some comments on that?
I think one rule is never be too comfortable about churn.
I understand. I understand.
But of course, Michael, you're right in the way that it was different in year 1 and 2 because how many have really had the opportunity to churn. So this that we can see, as Casper said, that even old customers that could be the cohort for 2017, that they still continue to grow. And this is just showing, I think, the value of a product. But of course, we shouldn't be too confident in that.
And there's a question here for the guidance. Maybe we should take that also here while we are still at all the financial stuff. Do we have included any entry into new markets, or is it what you are seeing right now and where you have already started targeting the customers? What is included in the guidance? I know it's hard to
we don't guide specifically on each market or whatever. So of course we have said when we did IPO that we are going on an internationalization journey. We expect to go into more countries, but we don't. So you can basically say, yes, that is included. Of course, it's included that we continue our internationalization, but we haven't disclosed which markets we go into, when, basically. So I think, I know that's a fluffy answer, but yeah.
It's a perfect, and you also answered whether he could hear when you were entering a new market, and your answer was no.
I think what we could say here is that in terms of financial numbers, it's too early to calculate too much into the financial numbers, because we want to see that we're actually entering a new country. So before we start out calculating too much to the future guidance in terms of AR, you will know what country we are entering.
Yeah. Perfect. I think that was actually a good answer to that. A conservative approach.
Yeah. So actually, I'll just take the last slide in here to if somebody wants to ask questions, it's not that I'm going through the entire P&L. Because I think the headline here is that we actually are okay with a negative EBITDA, and we also start out guiding that we continue to see a negative EBITDA. So I think it's open for questions on this slide.
Perfect. And I think I have one. You are alluding a little bit to so you still see pretty good numbers, and I must agree. If it looks like this, you will run around 15 to 20 million in a deficit, including what you're starting the year with on the revenue side. So you're still seeing a good trade-off between getting the customers 20 years, 20 to 25 years, and what you still put into your sales machine. I don't know whether you can elaborate a little bit on this, Casper or Nikolaj.
Maybe I can start and then Casper can fill in. So basically the background is that we can see for years that when we bring in customers, they had a huge value for us, both in year 1, you can say, but also going forward. So it simply makes sense for us to invest in getting those customers. And of course, you can also say a year like last year where we basically grew our manpower with almost 100%. That's of course also some investment that we have already taken in now, but they will sort of deliver over the coming years. So I think I can see one of the questions here about, what revenue do you target a cash positive business? We're not commenting on that, but of course, like any other business, we could say, hey, we are not going to invest anymore, and we scale down. And I think anyone who's not even have a math degree can then figure out that, hey, we could actually do a good business, but that's not our intention, because our intention is, as long as we can see, to invest in growth. Of course, at some point of time, that might change, but that is not now, and we haven't guided on that. I think what we have guided is, yes, we expect to have a negative EBITDA in 2021, and you can say if we didn't have that, I would actually be worried, right? Because we couldn't invest in something, and we can see many investment opportunity both in existing business, existing markets, but also new markets. So we don't comment on when we'll become cash flow positive.
No, I think it you're expressing this, and we hear that from software as a service companies. As long as our metrics, what we pay for a customer versus our lifetime is at a certain number, we can see that we are not, cannibalizing some of our market or trying to penetrate too hard or something like that. And I guess you also have that metrics. I know you don't want to disclose it, but that is how you run actually. How many years when you want to run a deficit with. Is that correct?
Yes, that's correct. That is correct, right? So you can say for now that is, and we're sitting here in Northern Europe where we still have plenty of digitalization opportunities, but we also see that rest of Europe is some years behind. So we can say, hey, we can still continue growing a lot in the Nordics, which we basically consider our home markets. But we can also see they basically entire Central Europe is also open for business. And as long as we see that, and that's of course also one of the reasons when we're on the stock exchange is that we want to invest in future growth. And as you said, if we at some point in time see that our metrics don't hold anymore, of course we could change strategy, but that's not something that is on a horizon right now.
It looks if your guidance is met, then the numbers are around the same that you're still getting. Yeah, and then do you expect to integrate further functionality features into the Penneo? Do you want to? Is there more expansion of the value chain that you could look at, or are you more looking at that's pretty good covered and now going maybe at you more would like to go out from the auditor's business and functionalities maybe needed in other businesses? I don't know whether you can elaborate a little bit on this, Nikolaj or Kasper.
So I can start and then Kasper can maybe add in. We're not only targeting auditors. Basically, when we go into a new market, we see that is a segment that really has a huge need for our core functionality. But we also target other regulated markets like finance and HR and stuff like that. So yes, we have a huge development team, and of course we're building on new functionality all the time. As Kasper here went to this slide, but we see, to the right, we also see the filing of the report is also something that we look into. So we have the entire value chain. So yes, we're working on new functionality all the time, but we basically have a product that adds a lot of value. And when you have that, it's also a lot about just entering new markets. So yeah. Jakob, Kasper, sorry, I don't know if you have some comments to this.
No, I think it was pretty well explained. But I think it's good to understand that when we are building a very strong tool to auditors in Europe, the outcome of this process is that we also have a very strong product for all other trusted advisors like your bank and your lawyer and so on. So I think CLA, the first part of this value chain for an auditor, is a good proof of that we're also building strong tools to other verticals. But when we want to go to Europe on the most efficient way, we need to focus on the place where we can easily, sorry for the easy part here, but where we can go in and get new clients in the top tier market, and then have the same journey as we have had on a home market, where a lot of stakeholders in normal companies know Penneo since they are signing the documents through the auditors. So when we are entering all the auditors in Europe, we'll build on a very huge distribution net to enable more features to that part.
If I can just comment here on a question, about customer lifetime, we're not disclosing what we see, but we of course we're disclosing our historic churn, which is in the range of 4% as far as I remember. So of course we have a long time, but we're not disclosing that to answer the question. That's
perfect. Okay. Yeah, you can do the calculation with 4%. That's 25 years, but of course, that's still
that might be a little bit higher.
That will show in 20 years if you can keep it. But you're not disclosing it, so that's an answer. How do you see Nets as a competitor? Nets and Nexi, are they a competitor to you, or are they in different markets?
It's basically not one of our core competitors as we see them, right? Of course, Nets and now Nexi is a big IT company. They basically running the NemID in Denmark also. But when we are meeting competitors out in local market, we basically see sort of two two types. We see the big generic platforms basically coming out of the US who want to be the X sign or whatever. And then we typically meet some local players, like you can say small Penneos in country X, who are startups. I think they are the two typically ones. We normally not in these calls comment too much on the individual, but it's not Nexnetty that are, I think, the core competitor for us.
And I can see someone is typing a question there. It came. Who is your hardest competitor and why? That's always a good question.
Pen. I think the hardest competitor is basically the old pen and paper and regulatory frameworks. So you can say here in the Nordics, we basically implemented all these laws allowing us to make agreements, sign electronically, right? And that has also taken some time. And when you go into new markets, it's typically some old legislation saying that, you need to have a notary signing on this. So I think that the biggest competitor is basically to do the old-fashioned way, and we're basically in that process of doing that. And that's why that competitors, even local ones, are not necessarily bad, because we still in many of these markets only started the digitalization, where basically like what we see as normal, for instance, in Denmark, that you can do your tax return electronically, that you can buy a house electronically, your annual reports electronically, just go to other markets, and basically it's still done on pen and paper or even with a notary. So the competitive situation, as Ulrik is asking here now, is basically that we see that we have this advantage of being very industry verticalized and focused on that. So if people just want a cheap e-signature solution, they can find something that is cheaper than ours. But if they want something that is tailor-made to their specific flows in a given industry, like auditing, accounting, finance, whatever, where a lot of focusing on compliance and IT security and that, then that's why they typically choose us. So yes, in every single market we go into, there is a small competitor, many of them who are doing some kind of signature solution. But in the long haul, I think that's not really what we are that concerned again, because we try to be verticalized in specific industries.
I understand, and I guess why when you're mentioning the pen and paper as your biggest competitor, some might say it's an easy way to get away from an answer. But do you know how much is digitalized if you look at Western Europe? Because that is that is the answer why competition is maybe not the biggest problem, but just getting out to the market and getting the knowledge. So do we have
we don't have that figure, but of course when we go into new markets and basically just take Central Europe as a whole, the big Central European markets, and basically look in all these workflows regarding the industries we're in, all these regulated industries that just Kasper said. If we just take accounting, auditing, finance, and maybe legal services, if you take those, and then if you look how many of these processes are today digitalized, it's really a few percentage. I will not send a specific on, but it's really, really few of those that is right.
There's a question here. Your business is highly scalable, it seems, but how do you keep up with demand for support, which could be a bottleneck? We have been running a webinar you might want to see where you are looking how to scale up your business or your people's power and what you are focused on. But if you can comment a little bit on the scalability, a big opportunity, but how do you keep up with that scalability? And then I think that should be the last question. I think we're running out of time.
It's of course not easy, right? Because when you grow a business like, just say 50%, that means in general 50% more support tickets, it's 50% more sales calls, whatever. And we have a big project running since last year, basically about automation, both in automation of our marketing and in automation of our product. So basically, to answer that and saying that is basically the potential bottlenecks, right? Is that if we plan to grow between 40 and 56% this year, we are in short not planning to hire between 40 and 46% more people. So we are trying to automate more process. Of course, we're not selling a fitness app, so it's never be like, hey, just click or whatever. There will always be onboarding. That's part of the value, but we're basically trying to make more of our service, you can say, self-service. So less calling out by our sales reps and more focus on content marketing, more focus on self-service for customers and less on, you can say, support. But it is, of course, like ask any company that is trying to grow approximately 50%. It's just, or ask Casper, it's everything from finance to support to HR, right?
Yeah, perfect. But the automation is probably the answer here. But I would like to say thank you both to you, Nikolaj and Casper, for answering questions, and thank you to the audience for a lot of good questions, and thank you for watching.
Thanks.
Welcome. Thank you, Michael, for hosting. Hey.